The tape is flashing live, and NVIDIA Corporation trades at a pivotal juncture near the $213 handle, carrying a multi-trillion-dollar market capitalization that commands the absolute center of gravity for global risk assets. Across Wall Street trading desks, retail forums, and algorithmic execution feeds, the prevailing narrative is framed entirely around headline revenue metrics, hyperscaler capital expenditure cycles, and quarterly earnings beats. Yet, while mainstream financial media fixates on headline-grabbing top-line figures and shifting sentiment regarding quarterly guidance, they are fundamentally missing the microscopic physics-level bottlenecks dictating the future of modern compute. The real constraint limiting artificial intelligence scaling today is no longer raw silicon transistor count or basic wafer allocation. It is the brutal tyranny of interconnect bandwidth and thermodynamic thermal dissipation. When an AI cluster scales to tens of thousands of processors operating in unison to train multi-trillion parameter frontier models, the system ceases to be a collection of individual computing nodes and instead becomes a single hyper-complex machine. In this domain, the speed of light through copper traces and the physical limits of air cooling create latency chasms that traditional architectures cannot bridge. Retail investors scrolling through social trading apps or glancing at surface-level valuation multiples see a mature chipmaker facing cyclical saturation. Institutional insiders, conversely, are tracking optical interconnect density, liquid-to-chip thermal cooling coefficients, and rack-scale integration physics. While casual market participants panic over short-term macroeconomic jitters and export control headlines, the structural roadmap from standalone accelerators to unified rack-scale systems like the Blackwell-to-Rubin architectures represents a structural moat so deep that standard competitive metrics become entirely obsolete. Drilling down into the daily market dynamics and institutional positioning reveals a masterclass in accumulation versus retail distribution. Daily trading volumes in NVIDIA routinely dwarf entire sectors, acting as a massive liquidity sponge where institutional heavyweights, pension funds, sovereign allocators, and mega-cap tech treasuries meticulously rebalance their exposure during routine market pullbacks. Retail traders, conditioned by high-frequency volatility and sensationalized financial commentary, frequently get shaken out of their positions during temporary drawdowns, mistaking structural consolidation phases for systemic weakness. Beneath the surface of these daily price oscillations, institutional smart money is not trading the stock on a weekly horizon. They are underwriting multi-year technological infrastructure buildouts, where every basis point of efficiency translates into billions of dollars in operational value for their end users. This dynamic creates a persistent tug-of-war between algorithmic momentum chasing and long-term strategic positioning, resulting in periods of sharp consolidation where weak hands are systematically liquidated. Before we map out the structural roadmap of how these institutional flows are likely to dictate the next leg of market expansion, let's pause right here. Are you currently holding a core position in NVIDIA through these volatility cycles, or are you sitting on the sidelines waiting for a deeper technical pullback to establish your cost basis? Drop your current allocation strategy and target entry points in the comments below, because understanding how fellow market participants are positioned is your best edge against institutional sweep algorithms. To truly grasp why NVIDIA commands such an unassailable market position, one must completely discard the outdated historical framing that categorizes the company as a legacy gaming hardware vendor or a cyclical graphics card cyclical. While consumer GeForce GPUs initially built the brand equity and funded early R&D, the modern enterprise engine is an accelerated computing behemoth powered by an unyielding software-hardware co-design philosophy. Years before the mainstream awakening to generative artificial intelligence, NVIDIA made a multi-billion-dollar counterintuitive bet on CUDA, a proprietary parallel computing platform that effectively transformed every graphics processor into a general-purpose supercomputing engine. This created an insurmountable software lock-in. Developers write code natively for CUDA, meaning that any alternative hardware attempting to displace NVIDIA faces not just a silicon disadvantage, but a catastrophic software ecosystem deficit. Today, the business model transcends simple chip sales, evolving into a full-stack data center architecture provider that delivers complete rack-scale systems, enterprise AI software subscriptions, networking switches, and cloud-delivered development environments. The historical cycles of PC gaming and crypto mining volatility have been utterly eclipsed by secular enterprise and sovereign AI infrastructure demand, transforming a cyclical semiconductor merchant into the absolute toll booth operator of the global digital economy. Looking toward the multi-year horizon, NVIDIA's growth catalysts are anchored by its positioning as an indispensable technological gatekeeper amid an unprecedented global capital expenditure supercycle. Hyperscale cloud providers and sovereign entities are projected to pour massive capital into data center infrastructure, transforming power grids and real estate into the physical foundation of the intelligence age. However, this trajectory is not without structural risks. Tightening geopolitical export controls, intensifying competition from hyperscaler custom silicon initiatives, and potential energy grid bottlenecks pose legitimate multivariable challenges to uninterrupted scaling. Yet, the rapid iteration cadence of NVIDIA's product roadmap, moving seamlessly from architecture to architecture, ensures that performance per watt efficiencies outpace competitive threats before they can establish a foothold. Ultimately, looking past the short-term price noise and ephemeral macro headlines reveals a stark reality. NVIDIA is not merely participating in an industry trend, it is engineering the foundational infrastructure upon which the next century of human productivity, automation, and scientific discovery will be built.